Joining us now, Jens Nordvig, Exante Data founder and chief executive officer. Jens, I want to start with Brexit because you promised us bottles of wine. Should we still be talking about Brexit a couple years from now, which we will, and we will be enjoying our wine. Jens, I want to start with this idea that we are seeing sterling selling off versus the dollar today, the most at one point since March. Is this a buy the dip kind of moment, or do you think that this is a harbinger of what's to come?
I think into these political events, it's very often the case that when you have a very strong consensus in one direction, you have some volatility into the sort of final negotiations. We've seen around Brexit here. We've even seen around this lame duck stillness in the US. When the consensus get too sort of swayed in one direction, that it's a dangerous moment. That's what we've had over the last couple of weeks, really, that people got very optimistic that a deal was pretty much done, and now we have some serious wobbles. And it seems very much like a 50-50 situation now. It's on the one hand, like, is this deal really going to be derailed by issues like fish, or is this more a situation where you have the different negotiations need to look tough? They need to look like they're really squeezing the juice out of this negotiation to sell it at home, right? And I think there's certainly an element of that. So that's the sort of hopeful interpretation. But this is coming down to the wire now, and we only have a couple of days left to get a deal done before it's too late, essentially, to get the formalities sorted out.
Jens, you put it so well, 50-50. Is this deal going to be derailed by fish? So what happens to the pound if the 50 happens or the 50 happens, if they don't come to a deal or they do?
I think if you look at euro sterling, we've already retraced a meaningful amount from the lows, meaning that the pound being stronger in that cross. I think we can probably move another 2-3% quickly if this deal falls apart, right? And that's sort of the knee-jerk reaction. Then we have to think about, what does this really mean, right? So what we're hoping for in the market now is that we have this so-called skinny deal that essentially sorts out the goods part of the relationship. But we've never had anything on the table that sorts out the services aspect, the hit from lack of access to the big service market in the European Union. And that would be really the long-term consequence. That was always in play, right? So you have a two-phase thing where we have to deal with whether we get the skinny deal or not. But the longer-term consequences in terms of the service sector is always going to be there. And that was always going to be the big hit to the UK economy in 2021.
Jens, what does the UK economy look like in 3-4 years? And actually, what's unclear is what kind of trade deal they'll get with the US, depending on whether they get a deal or not. But that's largely irrelevant at this point. What they do with taxes, given it's also one of the countries that has fared the worst with COVID-19.
Yeah. So I think on the U.S. trade deal, there's not much going on now. Like we've had some sort of big headlines that there was going to be something between the UK and the United States, but there's not really anything concrete going on there. So that's a long time away before we have anything positive on that front. So it really comes down to what are the specific sectoral impacts on the UK. And as I mentioned, obviously the service sector is going to be in having serious issues, and we can already see in the financial sector, right, there are a lot of different banks that are moving trading to Paris and other European cities. So that process is already in motion. And then there's obviously a COVID shock that the UK have to deal with in a very severe way. And if I was going to come up with a positive angle that I think is relevant for a lot of economies, like once we have the vaccines, there are certain sectors that are going to open up, right? So tourists are going to start to come back to places like London and New York, where I'm based, and that's going to be a big factor. So that could be really important for 2021 if we look at the second half of the year, where presumably a lot of people will be vaccinated. But that is sort of a 1 to 2 year dynamic, whereas there's some of the Brexit dynamics that are obviously multi-year dynamics going beyond just a 2-year cycle.
But Jens, you have the Tories in charge. It's a fixed term for the moment. Is there a danger that they go back to austerity to make a difference compared to the rest of the nations? And what do we do about UK debt?
Yeah, so it's actually interesting. So we at Exante, we're actually starting a public blog today. It's going to be called Money Inside and Out. And that's something we're launching. It's actually to address this issue that you are mentioning now. Like we have these big monetary policy issues out there. Doesn't matter how much debt we have. Is there a limit to how much monetary financing we can have and so forth? And the UK has been one of the countries which have sort of seen the most volatility in the fiscal position over the last decade or so. So this question is really relevant. Is there a point in which investors are going to say, okay, this fiscal policy is ultimately unsustainable. We don't believe that this path is something that is really a sound policy. Can we get to a situation where currencies start to trade like they do in emerging market space, where they really view monetization as a negative? And I think in the UK's context, if we have all these shocks hitting at the same time, it is something that comes into play, and people who are involved in sterling should think about that as a tail risk.
All right, thank you so much, Jens Nordvig of Exante Data.